Have you ever felt held back because you just don't have enough capital to trade? In 2012, Michael Paddock earned himself the best and most coveted position on the trading floor at the Chicago Board of Trade. This title, TopStep, became the name of his prop firm and funding company that has drastically changed the landscape for futures traders around the world. Fast forward to 2024, and there are more than a dozen reputable online funding companies offering the same opportunity that TopStep is also still offering. If you prove that you can trade well enough to earn a profit, they will provide the funds for you to trade futures without putting up any of your own money. What was once a less understood industry with a high barrier of entry has been changed forever. Welcome to Doji Dojo. As we explore this new world of futures trading on this channel, we will shed some light on what it takes to be a professional trader today and try to assist you in taking the right next step in your own trading journey. By the end of this video, you'll see how using these prop firms can help you reduce your trading costs significantly while increasing your potential profits at the same time. Before we begin, you might be wondering, why get into futures instead of just trading stocks? But there's multiple advantages to trading futures, which is why so many professionals prefer them. For one, the stock market is more restricted, requiring $25,000 if you want to day trade. The markets are open only from 9:30 a.m. to 4 p.m. Eastern Standard Time. On the other hand, the futures market has no day trading restrictions and is open 23 hours a day, 5 days a week. These are global markets, and the most popular futures markets get really active every day. Secondly, when you're trading futures, you get to use the power of high leverage to grow an account much faster than you can from trading stocks. But there's a flip side to that coin. The risk involved is also increased due to that same leverage. A lot of amateurs who get involved too early end up blowing their accounts often on the first day. So while there's less restrictions, you still need to have enough capital to be able to withstand the daily fluctuations in the futures markets. But if you spend the time to master a working system, there's almost no limit to your potential earnings. Here's a quick example to demonstrate the difference between stocks and futures. A move in the stock market on an ordinary day could take your account balance up or down a couple percentage points. If you have $10,000 invested in Apple stock, a 1% move would amount to $100 profit or loss. But in futures, leverage changes everything. While your shares of Apple represent only $10,000 of value, a single standard futures contract controls a much larger position in comparison. This could be 1,000 barrels of crude oil, 100 ounces of gold, or 20 shares of a major stock index like the Nasdaq, which currently trades at over 18,000 points. So we're talking about hundreds of thousands of dollars in a single contract, and you would be trading it with a small fraction of the cost. So when the futures market has that same 1% move, we're actually talking about 1% of the size of the full position, not the money you put in. So instead of a $100 loss, you could be down a couple $1,000s from a single trade. You might be thinking, well, my maximum risk is still $10,000, right? Unfortunately, you can actually lose more than what you put in with futures and end up owing your broker the difference. This doesn't happen often, but there are times when the markets can rally or crash 5% or more in a single day. If you took a 5% loss on a single Nasdaq futures contract today, this would cost you about $18,000. Due to the high margin requirements for a single contract and the added risk, a lot of people who want to trade futures are still unable to get started. So what's the solution? Well, unless you're already swimming in money and can easily handle paying the expensive tuition to the market, you'll need to find a way to manage your risk. And if you're undercapitalized, there's just no realistic way for you to do that. This is where today's online prop firms come in. If you are able to pass their evaluation and secure a funded account, you can take your own capital completely out of the equation. This effectively removes almost all of the risk while keeping the potential for large gains due to the higher leverage. Now, I'm not saying that you'll suddenly be able to make a lot of money when you trade on these funded accounts. You still need a well-tested trading system and a supreme level of discipline to find consistent success. But what I found is that the psychological shift from trading the prop firm's account is a massive advantage. It can boost your confidence and make it easier to stick to your system under pressure because you'll know that your personal funds are never in danger. Then, if something does go tragically wrong, the worst thing that can happen is you'll blow your funded account and have to start over, and these companies don't even hold it against you. Just like the veteran traders at Doji Dojo, these funding companies know that this is part of the process of finding success as a day trader. No one ever discovered a perfect strategy overnight. It takes trial and error and a lot of mistakes before you can master anything, and trading is no exception. So if you're undercapitalized and struggling to grow your personal account, consider using prop firms as an alternative. Build your confidence and test your strategy without having to eat the losses when things don't go well. Then, once you start withdrawing your profits, feel free to use that money to grow your own account on the side. Stay tuned for future videos where we will share more tips on how to choose the right prop firm and the steps you should be taking to fine-tune your strategy for greater success.